Monica, I mean, I think you're still expecting actually a Fed pivot in the second half. We could have, that being supported by data, but the data has been all over the place. Or certainly, the Fed promised something in December that they didn't go through it. Why has it been so messy? Is it communication, or just a much stronger than expected economy?
I think it's the second one. So the U.S. economy proved much more resilient than anyone was thinking. Now what we see is real rates getting around 2%. So we do expect that eventually financing condition will tighten, and this will start eroding the consumption side. So this is where this slowdown will come from. Let's see next week's CPI data and the retail sales to have a more complete view, but we believe the Fed will start cutting in July.
So, Monica, as there is more and more policy divergence, I'm thinking of Bank of Japan, but even maybe between the ECB and, of course, what we're seeing with the possible Fed, how do you play that in the markets?
Well, on the duration front, we remain quite flexible with a preference for the UK, in particular, the short end. We have positive bias towards the Treasury, and when it goes to the euro area, we are looking at the peripherals, in particular the BTP, while we are neutral on the euro duration.
Is there anything, Monica, that the markets are not really, constructive on right now where they should be? I don't know whether it's even concern on geopolitics, but it seems like quite a volatile market, but we also had a good earnings season.
Yes, definitely. What surprises me as always is this agnostic view and positioning on the geopolitical front. As long as on commodity prices, oil prices stay confined in a controlled range, the market seems to ignore what is happening on the geopolitical front. And if you look also at the election calendar, which is quite rich, I would say, for the second half, still the market is not taking any position. But as you were mentioning, earnings will prove to be pivotal. With this level of the market, valuations are quite expensive. Therefore, it is necessary that earnings do not disappoint.
So, Monica, what's your preference when you look at U.S. equities? Do you go for sectors? Do you stay away from the big seven?
Yes, it is very difficult amid this macro uncertainty and this level of valuation to have bold top-down stories. So we really do prefer to position within sectors in the UK market. In Europe, we are balancing quality and defensive. And on the US market, it is more on the equally weighted versus the market-weighted index. But again, it's more a bottom-up, let's say, this way market than a top-down play.